once again, good afternoon to another Business X-Ray show here on NTV Uganda. Now, last week we had a very interesting topic. As you've seen on our opening bumper, we're talking insurance, we're talking life savings, we're talking pensions. So it's the same topic that we want to unpack again today because it's coming out of the appreciation of the importance of insurance to households and also businesses. And today in the studio, I have an expert in the industry. We brought back Nicholas Lutakome. Nicholas is, again, the Vice Chairman, Uganda Insurers Association Life Technical Committee. Now, the association is an umbrella body that brings together all insurance companies in Uganda. And it is here that a lot of the kind of professionalism that you see in the industry is crafted. But most importantly, it is also here that, we pick or we can, get a feel of how the insurance industry can support businesses, can support households, and also, have some of the rules respected. So, Nicholas, you're most welcome to the show once again.
Thank you, Charles.
Very good. Now, last week's show, we tackled a number of areas, a number of issues. There's one of the areas that our people really liked so much, Nicholas, the area of annuities. I had quite a number of questions. Yes. People asking me about annuities. Of course, we also looked at the insurance industry generally and how important insurance is for business. Now, today, we want to pay special attention to the life branch of insurance, or what people call life insurance. Now, when we talk about this, a number of us could be more familiar with the education insurance policy. You've done justice there, Nicholas. I think everyone now knows those kinds of covers. But without any further ado, I'll throw it to you just to begin. What life insurance is, we can do a recap on that, but then also we can look at the different products that are presented within the life insurance branch of insurance. But before you come in, viewers, you can be part of this discussion. We want to answer as many questions as possible from you on this particular topic, especially some of you that have bought insurance products. We have the expert in the house, and he's not just the expert, but he also comes in as a vice chair of the technical committee for life at the Uganda Insurers Association. So, Nicholas.
Yes, Charles, thank you. It's not only a pleasure, but a privilege to be here again with our viewers. Insurance, generally speaking, is that safety net that you have as a plan in case what you planned or what you thought would turn out doesn't happen. And life insurance is what focuses on the person, the dignity, and everything you plan for. That's life insurance. Of course, we have another branch of insurance, which we call general insurance, that largely focuses on the property, the other assets that are finite. Whereas life insurance focuses on what is infinite. That's the life of a person, the legacy it puts up, and the people who look up to that person for a living. So we talked about a person. A person is seen as a person who is born, spends time getting educated, gets a job, pushes his way through life, and then reaches a time to retire. It's the assumption there he has planned well for retirement, and then life insurance helps him to retire comfortably with dignity, and that's through what we called, one of the tools was an annuity. The annuity comes in the sense that it helps him in the decumulation process of whatever he has put up together, and by giving a guarantee of a certain amount of money for a period of time that will give him a dignified life. And it's in addition to whatever that venture that he has taken in life, much as he could have other plans, this gives that assurance that he will never go below a certain level of income monthly. In a nutshell, that's annuities. However, there are so many battles you fight before you get to retirement. And there are so many products that are available. So looking at annuities, looking at the end of the process, so the tail of the process, your last 20, 15, 30 years, depending on how many years you live and after retirement, at what age you've retired. But there are so many things where life insurance comes in. And talking about life insurance in particular, we can have 1,000 products. They will all fall in the 3 categories of products that we have in life insurance. The first of which is what we call the term life assurance. And term life is a cover you buy when you're uncertain about a venture you're about to take. The fear of death and the effect to your family as a young man or young lady, you take up this cover. Let's say you've been posted for a job somewhere where you fear that much as the pay is good, you might face something unforeseen. Then you have endowment policies. These are policies that you buy and you're saving money for a particular venture defined by a term. Let's say for a period of time, say within 10 years my child will be going to school, within 15 years my child will be joining university, or within 5 years my child will be wedding. So those are different ventures that life insurance comes into play. And then the biggest or the most important policy for a person to buy if you want to set up a legacy is the whole life category, where you buy cover to pass on your wealth in a generation. So this is our type of cover that, for lack of a better example, I will use our society here. Families would compete for how many square miles of land they have, or how many heads of cattle they have accumulated over time. So for those of you who won't be privileged to have that, because that reduces with time, a whole life policy comes in whereby you put a value to your family. Should you depart, this is what you leave your family with. And that's now what goes on beyond retirement. And say, I want to leave my family at a net worth of $1 million, $10 million, or $5 million, an example of a figure, or $1 billion shillings, 500 million, and so on and so forth. That's the whole life. So there are different products that can be designed, but they will all lie into those 3 categories that I've mentioned above.
That's an interesting one. Especially, I think I will begin with the whole life thing. And again, viewers, you can be part of this discussion. I'm going to ask my producer to flash that WhatsApp number so that we pick your questions and comments right early in the show with Nicholas here. Now, with the whole life, because I really want to have this SME in mind, you know, or someone in the informal sector, because if you're talking about a product that can you know, guarantee me, you know, a certain kind of product, rather a certain kind of income, probably, or my people in case I pass on. I mean, do you have like strategies, or have you built, you know, that platform where these informal sector people or small operators, I'm a businessman somewhere downtown and that kind of thing, I need that kind of policy where I can come as an individual? Because there seems to be a tendency in insurance to lump up the guys at the lower bottom of the pyramid in groups and not as individuals. If I want to buy it as an individual for myself, can I get such products?
Yeah, the players in the insurance market have these options, and they are available at individual level, whether you're self-employed, which most Ugandans are, or you're working in an organization, or the thing is someone has to be working. And many times, of course, what determines the cover someone buys is how much he can pay. But of course, it's important to assess what your desire is. And of course, your age is not a big issue because most Ugandans are young. The reason why someone would buy a whole life cover is you do not want to pay premium, for instance, for a term life cover, and the term ends and you haven't died and you feel like you've made a loss. So you want to buy that cover because it will pay out whether or not you're alive or dead. It's important that people don't fear talking about death, because there are only 3 things that are certain in life. Sorry, 2. That's death and taxes. They will always happen. When it happens, we don't know, but it's what is important is the legacy you leave behind. The great men are remembered. after death.
Yes.
And that happens. It is part of society. And their legacy lives on. And part of that, the reason why many families in Western Europe or the US are very wealthy, one generation after the other, is partly because of these insurance policies. When a rich person dies, it's not only the shares he had in the various companies that are there, but also his life insurance policy pays out. And this is what I would encourage many of our businessmen and women, irrespective of level of income, to take up as a culture. It can add to part of your net worth.
Okay.
One of the things that I would want to mention, Charles, is when someone embraces insurance early, it has a lot of advantages. Well, that's why I believe every Ugandan should have life insurance, the way each Ugandan has a SIM card. The things that people struggle with, you see a person trying to borrow money at the age of 50 to start a business for the first time, which is rather difficult. And most lending institutions are asking questions about, can we lend to a 50-year-old, that kind of thing. A lot of these benefits can be given when a life insurance policy is in place.
I think that's a very important one, because I mean, if you talk about investments and savings, many time we tend to believe in, if I want savings, I need to run a business, my own business.
Yes.
Or probably we have this traditional way of investment, of investing, like you were mentioning. I mean, you buy land, you buy heads of cattle, and that kind of thing. But I think that is a very important point you raise here. And I think it's very important for us viewers and as people that are business-minded, that there are ways, different classes of assets you can have. Because an insurance policy is actually part of your asset portfolio,
yes,
in one way or another.
Yes.
But I haven't had so many people from the insurance industry really discussing or taking that line and, you know, telling the business people, telling Ugandans that, you know, as you think through your assets, you know, consider this, or assets where you want to put money, you know, in arcades, in the Mizigo somewhere, that kind of thing. Buying that policy is also part of the asset. I mean, Nicholas, there's a lot of, we hear these big terms, policy, you know. I mean, what is the level of engagement do you have with the people down there to actually show them that actually, besides putting up arcades and Mizigo, this can also be part of your asset portfolio?
I wouldn't say that we haven't talked about it. We have
the language you use. We
have several. We've broken this down to a language that we as Ugandans understand. Of course, historically, we had that thing of elite language. A lot of people who were doing this couldn't even go down to the common man. However, here we are trying to Ugandanize this and make it home. It is a very affordable tool to build your asset base, buying life insurance. It's not very common these days to find a head of the family apportioning pieces of land to children the way it was some time back. Even
the land is no longer there, really.
It's there somewhere probably, but it's getting
smaller and smaller.
Yeah, because the land you cannot extend land unless you annex a next country or something like that.
And yet our numbers are growing.
Exactly. The same thing will happen with cattle. The same thing will happen. I think those are the two most treasured things in Uganda: land and cows. So as that becomes increasingly hard, I think it's important for people to have these liquid assets.
I hear you.
Like life insurance to add on to their portfolio. And then we build the wealth of the country, we create assurance for the next generation, and build the dignity. And the financial inclusion tool can also help to build that dignity, where every family has a legacy going into the next generation. Our great-grandfathers had a legacy almost in every family, because each of them had a bigger piece of land or a certain number of heads of cows that they would pass on. I think that's why they set for us a very dangerous precedence. To get married, you needed to be loaded. So things that we can't easily sustain these days.
Today. Now, the other thing, it brings me to the issue of, because we all know that insurance, probably it's one of the reasons why people tend to, you know, pay more attention to land and cattle, because it's tangible. It's now the issue of the promise, because we know that when we're buying insurance, we're just buying a promise that at a certain point A or Y, the insurance company is going to pay. And I think one of the reservations to some Ugandans would be that feeling, that perception at a certain point in time that maybe insurance companies don't pay. So from where you sit, do you think you've scaled that challenge as an industry? And if you can share with us some of the numbers, especially on life, of the kind of claims or the amount of claims that you settle annually.
Yeah, like I'll give an example plainly. Like 2019, full year, the insurance industry paid over 30 billion shillings in claims for various causes. Life insurance alone, before I go to other sectors.
That was 30 billion.
Yes, but that is a very young industry that has been segregated for the past 6 years.
Okay.
Or 5 years till 2019, because we were segregated in 2014.
And by segregation, you mean?
Okay, life and non-life, when we became an industry and all that. So for an industry that hasn't been around for a long time, that means there is a lot of what we call reserves for claims that are to be paid in future. It's of course, like I told you, we do handle long-term assets and long-term obligations that pay out a little bit later on in life. And it is always easier. Instead of talking about 30 billion, what does that mean to a person down who didn't subscribe? It means nothing. You can only partake of this when you're in. And of course, an industry needs about 10, 15 years to start demonstrating much of this, especially in terms of maturities, retirement and stuff like that. And we are en route to that. We do not have a choice. We have to make these payouts. It's our pleasure to do the payouts because that stamps the relevance that we have. One thing that I can assure you is no insurance company can survive without paying claims. And every insurance company has a desire to pay the claims that are payable. And this is what we are focused on as an industry to do.
Very good. Yes. Now, when you mention claims, it's good. I mean, because here you have, you're wearing two coats. One being a CEO of an insurance company, and then also being a committee leader within the Insurers Association. Yes. One of the issues that I hear rising from people is that it is sometimes a long process when it comes to settlement of claims. You know, a lot of paperwork. Sometimes, you know, there are some questions here and there. And I want you to really tell us, what is the process? I mean, I've bought my policy. Yeah? The policies we talked about, whole life, for instance. And maybe I've passed on. And now it's my beneficiaries to come and claim it. What is the process? What does it take? Or if it is to benefit me as an individual, I'm still around and I've reached that point. Because I want this to be as practical as possible, so that the person who want to talk to down there can actually say, okay, if I buy my policy, and let's say its maturity is 10 years or 20 years or whatever, or 5, this is what I do. Do I just walk to an insurance company with a receipt and say I want my money and it comes? I mean, what is the process? Okay,
that's a very good question. I'll be very categorical on in that particular question. I'll broadly categorize claims into two for life insurance. Okay. So we have what we call the risk claims and then the non-risk claims. So I'll start with the non-risk claims. You've bought a policy and you have a goal. Let's say a goal is a 10-year goal to pay for education of your daughter or your son. And 10 years comes, you just walk in and get your money. The desire and the target of the insurance company is to make sure that this is as simple as you putting your ATM card into a machine. We won't have a machine like the banks do. However, we've made it very easy. My experience in the past 1 year is insurance companies are doing a lot of KYC on their members, updating their details. And insurance companies send their members communications that your policy is maturing next month. Please bring us this and this and this, such that there is no delay at the point of payment. So those are the easiest to pay because it is certain. It is going to be paid and the amount to be paid is known, and the issue is where do we put the money and whatever documentation you have to bring in. The other bit is the risk claims. Those are subject to some bit of vetting. Risk claims is someone is disabled, someone is dead, something unforeseen happened and it's insurable. Definitely for someone to be dead, there has to be proof that is dead. Proof is not a photograph. It's a certificate of death which is issued by a relevant body that has to be forwarded to the insurance company, and then a form is filled and all that. Sometimes this delay because probably the relevant authority has delayed to issue the certificate, which is somehow beyond the control of the insurance company, which is not allowed to pay a claim to affirm a death which never happened or which is never documented. So it could be seen as a challenge. However, I have to commend the relevant authorities. The speed has improved quite a bit. That is NIRA, the police, and the support of the other supporting entities, the hospitals and the likes.
Yes.
They have really improved on the speed. It is better than it was 5 years ago. But that's the process is simple and straightforward. We do not have the bigger challenges that some other markets have of fraud are not. We don't have a lot of that in life insurance in Uganda. People are very quite honest from what we are seeing, and the systems that we've put in place are ones that cannot easily be penetrated with fraud. And then the most important thing is coming out, supporting a claim, getting to know what is required before that happens. Like I said last week, it's important to have a meeting of mind when you're signing up. What is difficult is discovering about something, like getting a surprise at a point of claiming. I think that's what causes a lot of dissatisfaction.
Thank you, Nicholas. I think we'll pick it from there. Dear viewers, we're going to take a very short commercial break. Now, when we come back, we're going to tackle a very important aspect, which I'm sure every business person, everyone who invests their money, are keenly looking at. That is the interest on some of these products. How is it determined? And Nicholas here is going to be helping us understand that. And then we'll try to also draw a line between what insurance is giving you and what other investment options are giving you. We now already know that insurance is, one way of also building your asset base. Nicholas used the word of, he appended liquidity to it. So we want to look at the advantages that presents over and above land and cattle and the others. But most importantly, how do you earn on these products? And earning is interest. How is this interest determined? After this very short commercial break. Come back. We are again discussing a very important topic. That is the topic of life insurance especially. And then you can attach pensions to that. And in the studio, I have Nicholas Utakome from Uganda Insurance Association, and is also an insurance player. Of course, before we went for the break, we're looking at how, if I invest my money in, an insurance policy, a life policy for that matter, of course, we had tackled the different products in there and the kind of benefits that they promise. But the issue now is, how is the interest on those benefits determined? And it's the same question that Kate from Arua also here is asking. Yeah.
Okay, so the first point of correction, in life insurance, we don't offer interest. Interest is offered by banks on the savings accounts. So we talked about the difference last week. Okay. So banks handle the short-term savings, we do handle the long-term savings. So what we do offer in life insurance is what we call a bonus. So different policies have different terms. As the policies that participate in bonuses are given bonuses in two ways. There are policies that have a bonus set out, which is guaranteed, payable at the end of the term, at the beginning, and there are policies that offer bonuses yearly. So the ones that offer a guaranteed bonus determine, using expertise, the trends and everything, it's something that is technically derived, somehow similar to what other people do in their different fields, and that is set out, so it doesn't change. Then the policies that offer annual bonuses, every year the insurance company announces a bonus and it's allocated onto the members' value or policy value, what you would call savings or value of savings. And of course the bonus can't be taken back. It is given to you, and that is it. Whatever you accumulate every year is added on top of what you already earned. So insurance companies do invest this money in the different asset vehicles, and of course there is overview of there is a purview of the different authorities on where the money is, and when the bonuses are allocated to the members, it helps the members' value grow such that they get a reasonable return on their money. So a bonus is on top of what is already guaranteed as a benefit. So what is already guaranteed as a benefit is already good enough. So just like the word bonus means, it's a surplus of what it is that so we are trying to overwhelm you. Yes.
Okay, that's a good one. And I think that answers quite a number of people who are asking about the interest paid on life and savings, stock pension, how is it determined? But anyway, you've tackled a bit of that. I think one of the concerns in that last part of the question of how is it determined, I know, and I've seen this debate probably with other pension funds, where you've seen people saying, you see, we are getting money, but if you look at the realities in the economy, things like inflation, is it adjusted to inflation? Does it reflect the realities in the economy? So on average, the bonuses that you pay, are they, would you place them above these realities so that by the time, if say I have a policy running for 5 years or 10 years, by the time I'm ready to pick it and take it, it is not worthless. It is still, it's not eroded by inflation and that kind of thing with the volatility of our markets, as you know.
So Charles, that's a very good question. So let me just re-emphasize one point. So when you go and buy a life insurance policy and you're given a guarantee or a sum assured, or you're given a benefit that the policy has, that is already above what you would call the value of money for that period of time. So whatever is allocated on top of that as a bonus is something better than that, something that makes it better.
That's why it's called a bonus.
Yes, that's why it's called a bonus, not an interest.
Okay.
So what we do is to give you a guarantee, a peace of mind that you sleep well at night, knowing that you have your everything taken care of.
How many insurance companies are offering these kinds of products?
The insurance companies, we have 9 life insurance products, and out of 9, I think 8, every one of the 8 has an endowment policy on their product radar, and they have different modalities on how this works, but all the products are approved by the Insurance Regulatory Authority and for the better interest of the market.
I hear you.
Yes.
Now, you mentioned that the insurance, and I think you also touched it in our previous show, that there seem to be quite some good interest from Ugandans buying life policies.
Yes.
And what I know is that as, suppliers or players in this space, you, in a way, mobilizing long-term funds. Because if I buy my policy today, and I'm going to need my money in 10 years, that's money which you can use for so many other things. Now, one of the pains that we have in this market, again, we touched it a little, that the cost of money is very high. And we know that as players in this space, you actually have a lot of long-term money. I want to use the word you sitting on, if you're indeed just sitting on it. Yes. Now, why isn't this money freed to the market so that, because if the argument among banks is that, guys, we can't bring back the interest rates, or the interest rates are high because we use short-term money from deposits, you and me, which we deposit and need tomorrow. And all of them will tell you it's hard to get long-term financing in this market. But as an industry, the insurance industry, you're growing and you're mobilizing, especially the life branch of business, you're mobilizing these long-term funds. Why aren't they released to these financial institutions so that they can bring down the cost of borrowing with long-term financing? What needs to be done to make that happen?
So the last question actually I think sums it up. What needs to be done is we need to have more Ugandans embrace life insurance. Whatever little that we've mobilized is still within the financial sector. The banks have a chunk of it, the government has a bit of it through the treasury instruments that are available. However, it's not enough. The reason is we are still a growing segment of the economy, and we haven't reached that level of creating a significant impact for the banks to bring down the interest rates. Yes. However, we are headed there. Part of the reasons also we are not able to dedicate a lot of money to the very long-term instruments is because of the volatility in the markets and also the lack of availability of some of these instruments in the market. However, this is where we are going. The baby is still crawling, and very soon is going to be making those giant strides, and that's where we are headed. It's we are, like I said last time, we are running a marathon, not a sprint, and this is something that we are trying to inculcate even in our customers, to see that they start thinking that long term. Yes. There are quite a number of mid-term access to the cash that people want. Sometimes people commit more than they can afford, or sometimes eventualities come and they need to withdraw. We are working on this to make sure that we build a critical mass to get that there. We are working well with our banks. I won't say that we are making a big difference, but we are making a contribution in that particular space. Okay. However, we still have a lot to do to get to what is desired. The key thing is to get as many people as possible to embrace this product so that we build this.
Good. Now, you mentioned a very important aspect there, mid-term access. I know, especially with the education policy, the number of people that have embraced that policy, especially what people classify as middle class. And many that I've interacted with will tell you that, when you get a problem, probably you've been paying, let's say your policy is 10 years or 5 years, and maybe you get a problem in your 5th year for a 10-year policy, or in the 3rd year for 5th year policy, rather 5-year policy. There seems to be a bit of a challenge, accessing or how to proceed with the insurance companies. I want you to give, especially the viewers, that kind of reassurance. What happens? I mean, I've been having this job probably and I got terminated. We're into COVID, remember? And many people have actually lost jobs. Others are barely, surviving in these jobs. I've, bought a policy with one of your players. It's supposed to run for 10 years and I'm in my 5th year. What happens then? I mean, what kind of assurance do you give such a person that actually they're not going to lose?
So a lot of what happens with life insurance policies, if you buy it with a particular term, like the example you gave, you've taken out a 10-year policy and 5 years down the road you can't continue. The policy has a provision for you to cash out whatever value you have in the policy. We call it a surrender value. And sometimes it is subject to a period of time, having been on cover for a particular period of time. For some people it's 3 years, for some people it's not. There is no period you can get access immediately. For some other people it's a year, and so on and so forth. And this is stipulated out at the beginning, that you get a surrender value. When you surrender a policy and you get a surrender value, it is not as enormous as what you would get if you held the policy to maturity. These are terms that are set out because of how the fund is managed, how the product is structured, and how it makes financial sense to the customer and, of course, the insurance company running it. So the remedy available to a customer, the first one is to surrender the policy and cash it out. The second one is to regard the policy paid up. By making a policy paid up, you don't cash out, but you stay on cover until maturity without paying any additional premium, because you cannot be able to pay. However, you still need the insurance cover or the insurance policy. So you have those two remedies for you. You either cash out or you sign out without going out. So you sign it out and say, I've considered the policy paid up.
And all
I
these
can hold
options
it.
are given at the beginning
Yes.
of the policy when you're
They are
negotiating.
not only given, they are even named in the policy. So
I think that's very important.
Terms are clearly stipulated.
That's very important, and I'm sure viewers, it's very important before you sign in a document, especially a binding document like an agreement with, it can be a bank, an insurance company. You need to read the terms of those agreements quite well, because all these issues, all these things we're talking about are stipulated there. Because I've had people telling me, you know, I'm having a challenge here and a challenge there, but it's mainly because you may not actually pay attention to some of these details, but then also educating yourself about what you're going into. The way you make a decision to say, I'm going to invest in rabbits, I'm going to invest in goats, and you research about how money, you know, multiplies, or how goats multiply money and that kind of thing, is the same way you're supposed to, I think, pick a lot of interest and know, if I'm buying this product from an insurance company, this is how it's going to benefit me. Because the mindset is, you're not just buying a policy, you're buying an asset, which is supposed to give you dividends at the end of the day. One
of the things I noted about us as people, not only in Uganda, is we love what we call solidarity. Sometimes we buy things because of other people.
Yeah.
And like you said, people should read the document. Sometimes probably people might read and not understand what they are reading, but you can read it out with a colleague. Ask a question. You know, a person you trust, it doesn't have to be a lawyer. You may not have money for a lawyer. If you have a lawyer friend, it's good and enough, but read it out with a colleague. If it's a colleague who already has a life policy, they can help you understand one or two things that you don't understand. The key thing is to buy the confidence. Of course, literature is there to qualify what we are saying, but the confidence that we are giving you is we look you in the eye, we give you this assurance, and we will be there when you're not, to take care of your family.
Okay, I have, of course, some of the comments that are coming in. I have someone here is saying, thanks, Charles, for the show. Comments for Nicholas. Let him please simplify the language for the public. But I think you retouched some of the, but let me see what he's talking about exactly. Let him advise us, life insurance clients that has faced economic hardships this year and thus failed to remit the monthly premiums for, say, a whole year. We're tackling a bit of that. How can you help them? Because there are those that are failing now to remit. They want the policy to continue, but because of the challenges of this year, I think since March, businesses have been really struggling.
Yes. How
would you advise them to proceed?
So in a number of insurance companies, I know there have been concessions to engage customers who have either lost their businesses, they have lost work, or for a reason or another, they have had their income reduced because they are working in a sector where money is not coming by due to the pandemic, and they have been given repayment holidays on their policies, or they have had to restructure the plan, reduce the premium so that the policy still stays. Of course, the last resort normally is to surrender the policy and cash out whatever is there. I know those have happened. The key thing is engaging and reaching out. The most difficult bit is if you as a customer, you fold your hands and keep quiet. That might be a little risky.
Probably
it's important you reach out to the insurance company to work out a plan.
Work out something.
Yes.
I think that's very important, Nicholas, because I have about 5 questions here on the same, which means really the number of people that have been struggling given the times of what can they do to actually cash out before, of course, the surrender value, rather the maturity of that policy happens. What is the process? What takes place? If today, I bought a policy for 10 years and I'm in my 5th year, I'm challenged, where do I begin? What do I do?
No, the easiest beginning point is to reach out to the insurance company you have a policy with. You do not have to get into a taxi to get to their head office. You can actually pick up the phone and call them. These numbers are clearly stipulated in the policy documents in case they have changed. Every one of these companies has a website. In case you're stuck and you can't get that, of course, you can reach the association or the regulator, so the UIA or the IRA, for assistance, but that should not be the starting point. The starting point is to make efforts to reach the insurance company. The insurance companies give you documents with the contacts of who to contact, and it's important that you begin from there, inquire about this, and then you will be guided accordingly.
Very good.
Yes.
Now I have Motes from Ginger. She's saying about risk claims. If I'm a married woman who married with a child and all my interest is in this child, I put him as my next of kin and she's above 18 years of age. If I die, who claims? My husband or my son? I heard that in this case, it is the husband who claims. Is it right?
I think she meant to say below 18 years.
Below 18 years, yes, I think so, yes.
So
because 18, they
took
can
out
actually
a policy, and the child, I think, used next of kin that meant beneficiary.
Yeah.
So the child is the one who gets the proceeds of the policy should the married lady die. She doesn't trust the man for one reason or another. Probably he will use the money to marry another woman. And she wants the money to go to the child. Who gets the money? So normally what happens there is the administration of the estate holds the money in trust for the child until the child gets of age.
Very good.
Yes.
Now, I have again another question here. Someone is wondering, are bonuses taxed? Because we talked about the fact that with these products, you don't earn an interest, you earn bonus.
Yes.
Yes.
So bonuses are not taxed as of now in Uganda. This is the best time to buy. There is no taxation on bonuses for life insurance policies. When a bonus is declared, allocated to your account, no taxation comes to it.
Okay, that's a good one. Now, we've been talking about these probably in the context of the education policy. Now, I have Angela here, who is again wondering. She wants to know how this premium period is calculated. If I pay for a policy today, a life policy, or an EduSave, or whatever it is, policy, because I know that's a product probably of one of the companies, but if I pay for that kind of product, when do you start to count? Because we understand that policies are renewed every year, and that's a round of 12 months. So when do you start to count, and it starts where it begins where? Okay,
so it's life insurance policies are not renewed every year. So you buy, it just has an anniversary. So an anniversary is determined by the mode of payment of premium. Modes of payment are mainly monthly, quarterly, semi-annual, annual. And premium is paid in advance. That means you pay before the cover starts. Then you pay another premium before the cover starts. So you could, for instance, today is the 22nd of November. You sign up for policy and pay now. And let's say your cover begins 1st of December. Or your life insurance begins 1st of December. It means that you pay in November for December, you pay in December for January, and so on and so forth. So that's normally the practice in the industry. So you pay in advance for a particular cover, and for a particular cover period. And if you're paying monthly, you may have paid 2 premiums between now and end of year. But for this year, only 1 premium has been allocated, meaning your cover started in December. So the payment you made in December is for January period. For 2020-21.
Thank you, Nicholas.
Yes.
Viewers, we're making this practical as possible. It's unfortunate today our business coach wasn't able to join us, Charles Ochichi, but as you can see, we're proceeding to actually give you value. At least he's supporting the show. This show is supported by Enterprise Uganda, Ministry of Finance, and Uganda Insurers Association. Like we said at the beginning of these forums, is we want to make this as practical as possible. That's why we bring, at times, the business people that are actually involved in business, and we also bring the technical people, because without the financial sector, and in this we're talking about insurance, we're talking about banks, and probably the stock market or capital markets, you cannot do business, because these facilitators to actually do business. But also on top of just facilitating, they offer us with investment vehicles where we can invest beyond some of our business lines where we're seated. Like we now know there are these products where someone can put money and actually earn money at the end of it all. Now, I have a gentleman here who is asking, is Noah, is saying, of course, he heard about this bank assurance initiative, or you could call it innovation that came into the market. Can I buy these products through a bank? Because we know that the banks seem to have a much bigger branch network. I'm thinking of someone in down there in Palisa or anywhere. I will not mention a name.
Yes.
Yes.
Yes, Charles. So you can buy the life insurance products through banks. The banks that are licensed to do the same will also display their licenses in the branches where they are selling these products. So yes, banks have the power to sell you these products, and they are well equipped and suited to distribute these products, because they seem before you, if you're a new customer to insurance or a new person to insurance, banks understand your financial circumstances better than a person you've met for the first time. Yeah, they know how your cash flows are, they know how leveraged you are, and all these other things, so they are able to prescribe something that is closest to what you have, what you want, to have this complete financial assets. Yes,
that's a good one. So you talked about these monthly, payments for some of the policies, especially like the education insurance and the like. Am I allowed to pay in advance and say, I'm paying, if my monthly contribution, let's say, is supposed to be 100,000, and I say I'm giving you 1 million, and I'm covered for 10 months?
Yes, you are. You are allowed, and I'll tell you one thing, that if you, for instance, bought a cover for 10 years and you made a down payment for 10 years, and something happens to you in year 2, in addition to paying your claim on whatever guarantee we've given you, we will refund your unutilized premium as well, because you paid in advance for that.
That's interesting.
Yes.
Okay.
So you can make a down payment for the whole period, and in case you have not lived for the period of time that the money was supposed to be spent, we can refund your unutilized premium as well.
Okay. Then I have someone here asking very many questions, actually, Nicholas. I think we'll just have to be a little whatever on that. Someone is asking, can I buy 2 life insurance policies in the same company? And it's coming against the background. I feel I have enough money. We've talked about this being a savings plan, an investment vehicle, because if it is good, I can buy 10,000 or 20,000. So can I buy, let's say, 2, 3, 4, 5 policies in the same company? What do I do, in other words?
So one of the principles in insurance is called indemnity, which is a principle that applies to insurance apart from life insurance, meaning that you can only be put in a financial position you enjoyed before the loss. That doesn't apply to life insurance, because life has no monetary value. So in life insurance, yes, you can buy more than one insurance policy, and they all pay out in case something has happened. And there are various reasons why you buy a policy. So you could have 3 children and you buy a policy for each.
No, he's talking about insuring one individual. Me, Charles Boji. Yes. I buy policy 1 for Charles Boji, policy 2 for Charles Boji.
Yes, there is no law that stops you from doing that. However, the insurance company's discretion might. They might limit the number of policies you buy from one entity, but there is no law that stops you from buying 8, 5, 10, generally speaking.
Then I have a gentleman here. He's just making a comment, but you can clarify on it. He's saying, is there a possibility of emphasizing life assurance as a majorly protection product? Lots of agents from life products present them as savings, but that's a small portion. Is that true?
There's an element of clarification that can be given on that. So when we are talking about, for instance, endowment, I told you we have 3 categories where we had term, endowment, and whole life. So of course, endowment is where you have the bit of maturity value, which is the endowment component, where you talk about savings, and then the protection or risk component, which pays out on in case of an eventuality like disability or death. That's what makes a big difference, because it's not only savings, but also there is a risk or protection component. The biggest differentiator of insurance with other savings vehicles is that, and that has to be emphasized, it has to come out. However, the savings component is also there, and we cannot keep quiet on it, because it's one of the reasons why people live and hope in life to have a life insurance plan for.
I hear you.
Yes.
Because I'm going to ask you actually about that thing, because you know, we talk about social security, and you know, for viewers, of course, one of the reasons why we work is to have that, you know, fallback position, be covered. That's why you see a gentleman will say, I've built my 10 mizigos, so if things go bad or probably my job is no longer there, I have something to fall back on. Others, like we were saying last week, would say, I'll have, I don't know whether it still works, I'll have like 10, 20 children. Probably among the 20, some will be successful and I'll be covered. Now, from what you're explaining, you're actually telling us that insurance also, especially the life branch of business, offers that kind of safety net or social protection for that matter. Help us expand on that, the aspect of social security.
So social security is very broad. You know, it's not only the income flow, everything, but life insurance plays a big part, not only when you've retired, but even when you're still working. Particularly for the business community, you realize that people have started businesses, and when they die, the businesses die with them. Part of the reason is because the business thrives on their acumen, their connections, and whatever it is they can do. And as a result of a business collapsing, their families struggle to cope. That's probably why people always invest in real estate. Whenever they get some money, they suck it out of the business and put up what you said, rentals, or, you know, an arcade or something like that, because that does not disappear.
And it's a big problem because it takes away the liquidity from most businesses. If you look at the amount of money that is tied in brick and mortar, it is massive money.
It's not a big problem, but it has its challenges. Like you said, liquidity is eroded from the economy. So one of the things that we can do for the business community is like what the gentleman talked about on protection. So protection covers on businesses. A business can buy cover for their key person, this person who makes a difference. It does not necessarily have to be the owner. Use the example of an owner, because in most of our businesses, the owner is the key driver of the business. However, if they have gone through a phase, you may find that it's the person who markets who is the key person.
The key talent.
Or the dentist. You know, you have a small dental facility.
Practice.
You own it, but people come to it because of your specialized dentist.
That's a good point you're making. Sorry, Nicholas, I'll cut you short, but we'll pick it from there. Dear viewers, we're going to take a very short commercial break. When we come back, we'll pick the discussion from there, you know, covering some of your key talents. Welcome back. We're still talking about insurance, and specifically we're focusing on life insurance, a major critical branch of insurance, because it talks about savings, it talks about protection, and before we went to the break, we're trying to look at the relationship between insurance and social protection. And of course, with social protection, we're talking about protecting our income and, you know, protecting our businesses and operations, just in case anything happens today or tomorrow. What then happens? And of course, these businesses, of course, you know, we studied in commerce the key factors of production, and one of them is actually labor. And before we went for the break, you were trying to, you know, help us understand that for certain businesses, it's actually individuals, and it may not necessarily be the owner, it might be the key talent that you have. And you're saying, as insurance companies, you have a cover that also, you know, gives that kind of safety net for that category. So Yeah.
So I was just making a point. So I'll use an example of this TV station. So probably people watch this program because of you. And it's Charles Boji, and if Charles Boji is handling a program like this or Money Matters, people watch Charles. If you change Charles tomorrow and put another person, Nicholas has applied for that job, you lose half the viewership. So Charles is a key person because probably that program brings in 50% of the income for the TV station. And for some reason, something unfortunate happens to Charles, and the business loses that income, and it takes them 6 months or 8 months to recover, to get a person who is as equally good or somewhere closing in on that. That kind of cover can be provided by an insurance company to replace that income that is lost. And this is a conversation you have when Charles is still there. You don't start this conversation after Charles is out there. Now, not every business is as sophisticated as NTV. How every person down there in the business community, in your own community or neighborhood, where it could zero down to the owner, the simple owner who runs this milling company. They are the ones who do this. The person is bedridden for 4 months because he was caught up in tear gas, like what happened during the week. And as a result, the suppliers are disappointed. There's a lot of this. So they lose income, and it spills over in a year. So those are components where life insurance makes a difference. And for a small fraction of premium that someone pays for that, it gives that assurance that the business will continue. The employees will get a salary, and their families will be supported through that difficult time.
Talking
We've
about
lost
premiums,
a lot of value.
I hear you. Talking about premiums, Nicholas, many a time when we hear, especially the word premium itself is, it sounds quite sophisticated and heavy. And some people might think, you're talking about millions, or you're talking about tens of millions to actually buy some of these covers. Is it the case?
No, there are very few individuals who would pay millions of shillings to buy insurance. I will tell you that for as low as 50, 60,000 a month, people can buy life insurance cover for them and their families to start with. And of course, it's pocket friendly for most of the people who are working. And the opportunity cost, of course, is there's a benefit for everyone who can be able to subscribe. So these covers are as affordable as that. And the only thing you need is commitment, and you need to start as early as possible, because the more you wait, the more value you lose.
Very good.
Yes.
Now, on this show, we tell our viewers that whenever, this time comes, they pick a pen and paper. So it's like they're in class, because it's part of the literacy that we want to give the business community out there that are watching. So I have someone here who is saying, can you shed more light again about term life and whole life policy? Yeah.
Okay, so term life is a generic term for an insurance cover. There are different covers that can be there, but term life is a generic term for a generic word for life insurance, whereby the word term means a period of time. So that period of time can be 1 year, 2 years, 3 years, and so on and so forth, in which you buy protection insurance against something unforeseen that you don't want to devastate your circumstances. The best example I can use is you're taking out a loan. You have to give in security. So you're taking out a loan to boost your business because you've gotten a tender to supply some items, for instance, for a government contract. And you have to give in your title for the house where you're staying. And the last thing you want is someone to take over your house because you haven't paid a loan, and your children and wife are thrown out. And the loan is 3 years. So the term is 3 years. And the insurance company undertakes that should you die, or should you lose your limbs and you're not able to work, your house won't be taken over. So that's term life assurance. So you've taken out a term cover for 3 years, and should you die there, the insurance company will pay off the loan, and then your family retains the house, and the scores are even. Whole life is you've decided to be insured for the rest of your life. And that means that at any one time you die, whether you die at 40, 80, 120, whatever it is, you've raised the net worth for your family. It's actually considered as part of your net worth.
Okay.
A lot of the people you see on the Forbes list, part of what is counted is the life insurance cover and a whole life, because this is irreversible. You can't reverse it. So when you're counting, it's part of what you start with. They say he has a house in Muyenga. How much is that? This much. He has a car. How much is that? That kind of thing. So whole life is part of that. And it means that it's part of the wealth you have for your children or your descendants. Should you pass on, the time you pass on, they can turn it into cash. Before you pass on, it's money that you've put aside to be part of your net worth. And everyone has a portion of their wealth they can put there, because everyone who has like an ambition to leave something, to leave a mark on the planet, can have a whole life policy depending on what ambitions you have.
Very good. Now I have Alpha here. Is saying what you're talking about is very good, but there is need of more awareness. So he's wondering, do you have some trainings for people who would like to learn more, especially the informal sector?
Yeah, we try to do that more from an association level. And also I've seen a number of programs by the insurance regulator to do a lot of this sensitization, not only life insurance, but also the other classes of insurance, agriculture, motor, and the likes. We may not have reached your particular neighborhood yet, but we'll get there. We thank NTV Enterprise Uganda for opportunities like this to have the mass broadcast to the people to get this done. And we continuously do this.
And I need to emphasize there.
Yes.
That this is part of the effort to actually create awareness.
Yes, exactly. So this, I mean, a TV like this reaches millions in a second. And of course, this one, we bring together so many people. Then once we get down to your community, it's even more intensified and broken down, probably even in your local language. We try our best to get this information to you.
Very good, Nicholas. Now I have Julian from Nigeria. She's saying, if I take out a personal health insurance, but later I get a job that provides health insurance, what happens to my premiums made from the personal insurance? Or is it merged with a new one?
Health insurance. So you've taken out a personal health insurance, you've joined a place of work that offers health insurance. You want to cancel the first one and remain with the one, that's entirely up to you. However, it may not be in your favor because cancelling it, you might not save you money. So you can as well be advised to keep both of them because health insurance has limits. However, health conditions might go beyond that limit.
Okay, good.
Yes, because you may have health insurance, say, of up to 100,000, and you have a health condition that requires 150,000.
Yeah.
So advice is if you can keep both of them, it could be a bigger safety net for you.
Good. Now I have Darius here, Nkwasiwe from Rubaga, is saying most companies have fixed amounts that one can start with, especially with education policies. Most of them, Uganda shillings 100,000. Isn't this limiting low-income earners? I may be interested, but can't hand 100K, but rather 50, 30K. What do you say to that? So,
like you said, many companies have minimum amounts on that. However, there are reasons why they have those minimum amounts, and that has to be respected. So the advice I would have for Darius is to search as many as possible to look for the options that could be available for him or for a particular person who needs to save lower than 100 or to pay a premium lower than 100,000 for an education plan. So there are various reasons why people come up with those minimum amounts, and they are very genuine reasons, so which we should respect for the continuity of that particular venture or business. Yes.
Okay, I have another one here. I have a policy and did a standing order from my bank to the insurance company, which most do actually for these monthly premiums. If I die and the standing order still continues after my death, maybe to delays in official communication of my death, what happens?
So you die, the standing order is still going on until probably it goes on 6 months later. The insurance company discovers that the person died.
Yes.
So what happens thereafter is the insurance company now discovers you're dead. A claim is lodged, a payout is made. It's not only a claim that is paid, but also a refund of premium collected after death. Because then the premium was supposed to be paid up to the point of death.
Okay. Okay. So when it comes to, of course, we have the categories of people, that are really, really down there. I may not have a bank account, for instance, where I'm able to give a standing order. I'm a farmer somewhere and I want to buy an insurance policy. I'm a peasant, but probably I have, some extra cash on me. I want to buy that policy for my children and that kind of thing. What other options, payment options do I have to actually service my policy? Can I do mobile money? Can I walk in with cash? But mobile money especially, because we know how much that has penetrated down.
Yeah, we use more mobile money a lot, and these days we have Momo Pay collection accounts, which means that a person doesn't actually have to be charged for the transaction. Those are there. We don't encourage so much cash because it's expensive. It means every time you're paying, you have to walk to the office and pay, or to the bank and pay. So it's easier to use mobile money or to use the bank account if you have one to make your payment. However, even cash is available as a method. However, it's very risky and it's easy for a person to forget or to skip on a payment. It does no trail apart from a receipt that you get after paying. Whereas mobile money, there's a trail. A statement can be printed out by a third party and all that. So we encourage mostly the methods that have a trail of transaction.
Mobile money, bank, and that kind of thing.
Yes.
That's a good one. I have Tono Tong from Ntinda. He's saying he would like to know at what price, again, I know you talked a bit about it, but he needs some bit of reassurance. The price at those insurance policies, are they really affordable to the common man?
Yes, they are very affordable. People love using the word cheap. I don't like using it. The policies are affordable if you consider the cost-benefit comparison on them. I mean, if you're paying about 50,000 a month for something that gives you a particular set of guarantee, you sit down with the insurance company, compute what other options are there or which other way you can save money, you can always have that afforded. I know most Ugandans may not afford to pay 50,000 a month, or many Ugandans may not afford, but affordability is an issue of perspective. When someone says that's expensive, it means they have formed an opinion that the money is not matching the benefits. They don't mean that they can't buy it.
I hear you.
Yeah, so it is us to demonstrate that there is value in there. And the 50 will slowly become an 80 and 100 and 120.
Good.
Yes.
Now, there's need for more clarification for Richard Seriombia here. He's saying, is there tax charged on my life insurance policy during the payout at maturity?
There is no taxation on life insurance at all. So this is something that I speak with utmost confidence. We do not have any taxation on life insurance, both on premium, when you're paying your premium, and on the payout when your benefit is being paid.
Okay, then someone is asking about the people that are aged, probably 80 years plus. For starters, at what age? Is there a limit with the age at which someone can buy, some of these life products? Our
age is quite extensive as per Uganda. Our life expectancy in Uganda is 63 years, and we take on people up to 65. Okay. So that's already above our life expectancy. Almost every Ugandan is below 60 years. Because a bigger chunk of our population is below that, currently speaking. So we do not have a lot of segregation on age given the circumstances of our country. Maybe another country with a slightly older population, they might feel we need to extend. However, for most Ugandans,
Okay.
It's quite good to embrace that now.
Okay.
And that's a very good question to put in perspective.
All right.
What you don't want, if you're 45 years now, to start asking the same question 20 years later. Can't you extend the age from 65 to 80 so that I join? It is better you join now. For instance, for a whole life cover, if you joined before a certain age, let's say you join now at 45 and you reach 60, the insurance company can because when you buy a whole life cover, you don't pay premium for the rest of your life. You pay premium for a particular age, and then you stop and you remain on cover until I won't use the word eternity, until death. And it is easier to join when you're younger because you do not know when you're going to sign out.
Okay.
Yes. So for most of us Ugandans, we are below 60 years.
Okay.
We do not have an excuse of not signing up early.
I think that answers the question, because I have someone here who was asking, he's above 50 years, and what advice can we give him? But still, he needs your advice.
He needs to sign up now for a life insurance plan because if he's below 65, I think every insurance company would take him on or her on. And the earlier you join, the better, because every year that passes, your premium goes up. Yes, so it should be a birthday, a next birthday target that I'm not celebrating my next birthday without a life
without having
policy.
this cover.
Yes.
Then I have Daniel is from Nigeria. He's saying, I have a 10-year education saving insurance policy which has run for 7 years now. We tackled a bit of this earlier. So he's saying, I now want to terminate the cover so I can venture into business, a business option. What is the termination procedure? Probably we can revisit that. So that's
the two options available to him on termination. Is he either terminates the cover and cashes out. I wouldn't advise that much because he might lose out some money, or he can consider the policy paid up. So that means he doesn't pay any more premium, but the policy is held for him to have cover for just the last 30% of his time, the 3 years. And he still gets the education benefit within the cover without losing the life cover within that period. That would be the best option. Since he has held on
for 7 years.
Yeah, he shouldn't give up now. Then probably he can use the future premiums he would have paid now to start venturing into a business that he was thinking. Because this policy was taken out for education, not business. And if the education need is still there, I think it's better for him to consider it paid up. Yes. But the most important answer is the one that he will get when he engages his insurance company.
I hear you.
Yes.
Now, talking about insurance companies, I have Joseph from Nansana is saying, what is the starting premium for whole life? Which companies have that facility? So the starting premium for whole life would depend on the age of a person and the limit of cover he has. The companies that have that, I think you can try Sanlam. They have a whole life cover for people between the ages of 18 to 65. And that's something that you can always explore on a one-on-one basis. I hear you.
Yes.
I have a very interesting question here, Nicholas, which I think rhymes with part of our culture. We tend to sometimes not discuss much about where our assets are, especially if they're not physical, like a building here and there, sometimes to family, for so many reasons. So someone is asking, how does your family get to know about your life insurance policy when you die without having informed anyone about the policy? So, and I think it's a question that also tests the integrity of the insurance fraternity to actually inform. You have, I think he wants to know, do you have those cases where the insurance company, you know, your beneficiary there and the insurance company is calling you saying, hey, your father passed, we understand, but he had a policy here. So how does your family get to know when you didn't inform them? The question is, did you intend them to know? So maybe that's the first question. That's a good one. So did you intend your family to know? Yes. Obviously, a person who loves a family would intend that they know. However, if, for instance, for some reason or another, he hadn't told them because he wished he would tell them when the time comes, or
he says, I'm buying this policy now, but I'll tell them in 2025. And God forbid he doesn't reach 2025. But he had put their contacts on the policy as they are the people who are on the contact list. So there are so many ways insurance companies would know that a person is not active or is not there. One of them is missing premiums. So when you miss premiums, of course, I will try to reach out to you, find out what's happening, your money is not coming through and something like that. And by making those calls, we will obviously get an alert. Many times when a person has died, the phone is not going through, or if you're lucky, it goes through, someone who will inform you. This one we buried last month or something like that. And then now you start on the process, because you would actually have to contact the beneficiaries, or the next of kin, like some people would designate, and the numbers that they have designated to call these people. An insurance company has an interest in doing this, because if you do not pay out that claim, you will have a lot of money held up in reserves or unpaid money, and it reflects wrongly on you, because you have so many policies that are not paid out, yet they should be paid out. So there is a score to get from that as well. Then the other bit is we do this business in good faith. And every time we pay a claim, you may not have been observant, but every time we pay these claims, we really let the world know that someone has been paid. To build that confidence, it's the best way to demonstrate this. And what better way than reaching out to these beneficiaries who are named. So every time we get an opportunity to pay a claim, it's an opportunity to demonstrate to people that we've actually paid. This thing works. Yes.
I hear you. Now I have Emma Safari here, again still talking about giving that reassurance to the insuring public. He's saying, besides you, IRA, Insurance Regulatory Authority, what is UIA doing, to help deal with the issues arising between the buyers of insurance and the insurance companies, as and when they happen?
So UIA are the insurance companies, and they come together as an umbrella, and with initiatives like this to educate, create awareness, running these messages either above the line, below the line, organizing education initiatives like getting people together and sending the message home, is what insurers come together to do under that umbrella called UIA. Yes. Okay.
Okay. I'm afraid, viewers, we are coming towards, I know there are still many questions that are coming in, but we are approaching the end of this interface. I think, Nicholas, this has been a very good, real discussion. You can see that people are really, really interested in knowing what you're offering in life insurance, and the savings aspect, the protection aspect, and I think what needs to be done more is actually to keep these awarenesses programs going, and we are committed with Enterprise Uganda, to give you this kind of interfaces. Of course, we have these partners like Uganda Insurance Association that we work with. Like I said at the beginning, business can't thrive really without facilitators, and among the key players in this space are players within the financial subsector. And here we're talking about banks, we're talking about insurance companies, and we bring banks here as well, because we normally get it here. You talked about is it cheap or affordable price or something like that. But for banking, mainly you'll hear words like, we don't have cheap credit, we don't have affordable credit, and that kind of thing. But yeah, we've heard from Nicholas, and we'll be bringing the bankers here also to share with us what they have in stock for you. At least we now know what the insurance companies can offer us as business people, as households, because I believe every human being, has a business mind somewhere. There's business in all of us. So on that note, Nicholas, what would you like to say as we come to the end of this interface?
Okay, my message is to encourage Ugandans to embrace insurance in general, and life insurance in particular. The earlier the better, because every step you move forward, the degree of uncertainty it increases. It's part of growing up. So I would encourage every Ugandan to take up a life insurance policy. Every Ugandan with or above the age of 18 for the protection of the family and building of the legacy. Like I said during the program, everyone has to leave a mark on the world, and you could take up life insurance as part of that legacy. When someone is computing net worth, it is easy to first start with real life insurance policy. And that's part of what you start on your portfolio and say, on my portfolio I have this, I have a house, I have a piece of land in a village, and of course I have also liabilities which can always keep reducing, like loans and all that. So I encourage every Ugandan to take up this and reach out to any life insurance provider closest to you, or a car of your choice or something like that. Try to assess the best option and you get these products up. It's very important for you. It's very important for our economy, for people to build wealth.
Thank you very much, Nicholas.
Yes.
Viewers, this week, again, I have to state that we weren't able to have Charles. He got quite some engagements at the last minute, but we'll be having him next week. But we continue to actually push forward with the spirit of teaching you how you can really make it in this rather changing and quite challenging world as well. Of course, today we're talking about we're looking at the area of life insurance and how this can actually offer you an option, to save and also have that safety net, the social protection safety net. And this, of course, goes beyond just households, but then also businesses. I love the cover, Nicholas, the one you talked about of, if a business lost a key talent or something happened to that, and then, there's that loss that happens can actually be covered. Because we're talking during the break of how certain practices like dentistry, if you lose your key dentist, that can spell the end of you in business.
Yeah, or pediatrician.
Exactly. And we see this happening a lot in these small businesses. The key player, the key talent disappears and the business goes. And of course we have that problem as a country, that our business mortality rate remains high. And part of the reason is actually because of lack of, support institutions or our lack of awareness to actually buy or bring on board partners like insurance players or get insurance covers to give us a bit of a fallback in instances, that are not so good once they happen. But that's all we had for you this evening. I've been your host, Charles Boji. It's been a pleasure. And I have to apologize again for those that are still sending through questions that we didn't have enough time. But we'll bring back the Insurance Association. They're partners with us, Enterprise Uganda and the Ministry of Finance. And we'll have more of these interfaces to really make your business life thrive and your personal life thrive. Until next time, have a good evening. God bless.